strategic reset, pause, then what we have is probably too much supply out there relative to current demand. And I am talking about GPUs and use of that, but that will be a moment in time because this is so big, and we're seeing in the private markets a lot of companies being funded who are going to come up with something new, interesting, different, provocative, controversial.
Cathie Wood, founder, CEO, and CIO of Florida-based ARK Invest, manages multiple actively managed exchange-traded funds centered on disruptive technologies like blockchain, robotics, AI, energy storage, and gene editing. The U.S. Securities and Exchange Commission approved ARKB spot Bitcoin this year. Our position was approved. Since Bitcoin ETFs broke many exchange-traded fund records worldwide, the industry has focused on them all year. Recent sources say ETFs had 3 straight days of inflows on Tuesday after large withdrawals. Net spot Bitcoin ETF inflows are $15.27 billion. Peter Diamandis says BlackRock's EBIT, which received $11.3 million on Tuesday, has 3,12565 Bitcoin worth $8.26 billion at current prices. ETF performance and the crypto bull market are losing favor, but Cathie disagrees. The 2024 to 2025 cryptocurrency bull market is halfway over, and Cathie thinks Bitcoin and other cryptocurrencies might hit record highs in weeks. The first is Morgan Stanley or UBS listing Bitcoin ETFs. Cathie believes this will happen before 2024 and quickly affect Bitcoin's price. Bernstein Research Analyst's June research note forecasts reflect Cathie's schedule. Bernstein analysts predict major wirehouses and significant private bank platforms to list spot Bitcoin ETFs between Q3 and Q4 this year, boosting Bitcoin and other crypts prices. Cathie also discusses her $1 million Bitcoin prediction and ETF's next phase. Like, subscribe, and enable post notifications for more videos like this. Thank you.
Like you, we did enjoy nearly 100-fold increase in NVIDIA. It'd be on this stock, the split stock, from around 40 cents to $40, and the stock's at 120. So, and we still own it in our more specialized portfolios, one being more AI focused. But our thought here is, okay, $3 trillion company, gross margins in the high 70s. Its major customers, the cloud customers, their gross margins are lower than that. That's a very concentrated customer base. And the history of the hyperscalers is when they see the economics going to their suppliers, they decide, we're going to do that. We should do that. We can do that. They're very cash rich. So, NVIDIA is an incredible story. All praise to Jensen Huang and his team. And they're trying to evolve from a strictly hardware company to more of a software company, a platform company. Now, will the competitive environment allow that? As I mentioned, the hyperscalers, they're all designing their own chips, right? Some of them more general purpose, some like Tesla, I put that in a hyperscaler, designing its own chip. It already pulled one NVIDIA chip out of its cars. And with Dojo, ultimately, I think that it will verticalize completely. So, during an earnings call, Elon said, and we know he was trying to get more NVIDIA GPUs. So a couple of quarters ago, he said, building a chip is really hard, really hard. Now, we might be successful, but it's really hard, and the odds are low. And then, lo and behold, a couple of quarters later, not only does he have all the chips he needs, but he donates, I don't know how it worked, I'm sure it was legal, some from Tesla to X. Now, this brings up supply versus demand. I think what's happening in AI, and I'd love to get your thoughts, Peter, what we're seeing, and we hear about this from Palantir. We're learning from Palantir how much it is going to take, how much time and preparation it's going to take to move into the AI age for these large enterprises, and all of these companies are catering to the large enterprises. What do they have to do? The way they need to set up is, first of all, they have to aggregate their data, far-flung data. They don't even know where a lot of their data resides. Aggregate it, clean it up, integrate it, map out workflows in excruciating detail. And what we're seeing now is, the cycle is a little uncertain. The cycle, meaning the economic cycle, we're seeing the consumer is showing signs of significant weakness in some categories. And so companies are saying, okay, this is a strategic decision we have to make, and we're going to put a lot of resources into it. But let's make sure we prepare.
Even though cryptocurrency-based ETFs are very popular with investors and have had record-breaking success, advisors and wealth managers are still not fully open to or accepting of them. According to new research from Cerulli Associates, only 2.6% of advisors recommend cryptocurrency to their clients, and another 12.1% will use or talk about it if the client wants. Samara Cohen, BlackRock's chief investment officer of ETF and index investments, recently said that about 80% of the money that has flowed into spot Bitcoin ETFs has come from buyers who use online brokerages to do their own research. As we recently talked about, experts think this will change later this year, when wirehouses finish their checks and start listing the goods. James Safeart, an ETF analyst at Bloomberg Intelligence, said that many of the biggest wealth platforms, wirehouses, and advisor networks haven't fully approved Bitcoin ETFs yet. Currently, the only way for those advisors or brokers to buy a Bitcoin ETF for a client is if the client specifically asks them to. James also said that he thinks things will change a lot by the end of the year, which will let more financial advisors offer spot Bitcoin ETFs to their clients. Cathie agrees and says that the first announcement should come between now and October, which is 6 to 9 months after the goods went on sale in January. Here are some more clips from the interview.
I think, so we have 4 people at ARK who are working on crypto generally, one dedicated to Bitcoin on-chain analytics. And judging by those, we believe, halfway through this bull market. And halfway doesn't mean we're halfway through the price increase, because, at the end of a bull market, prices tend to go parabolic. So we have no idea where that, but we feel very strongly, just based on on-chain analytics, looking at them versus the short 10-year history, a little bit more than that history, that we're halfway through the bull market. What's very interesting, since the ETFs were launched in January, many people think, all right, the boom, and we've had a very nice showing, David versus Goliath. We're in the fight, and very
Congratulations.
happy where we are. Yeah. But not one major, what we call them wirehouses, like Morgan Stanley, UBS, Wells Fargo, Bank of America, Merrill Lynch, not one has put Bitcoin on its platform yet, a Bitcoin ETF. They're all doing their due diligence. And I think what's going to happen is within the next few months, one will, and it may be not the big ones, it may be an independent RIA like LPL. They tend to move a little more quickly. Once you get one with a spot Bitcoin ETF on its platform, bull is over 1.5 million. Our base is in the $650,000 range, so about tenfold from here by 2030. And there are 3 big building blocks. Institutional is one, and I would put it sounds like retail distribution, but these are institutional decision makers at B of A, Merrill Lynch, and so forth. So that's one. The second is, this is a replacement for gold. So we assume that it's going to subsume 50% of the gold, what would be the gold market, especially as younger people are looking to diversify. And then it is an insurance policy. In emerging markets, I just visited El Salvador and had the pleasure of meeting the top officials there, and they are blazing a trail, making it legal tender, and giving their populations or showing the way for other countries. Innovation Technology Act of the 21st century, so FIT 21, was able to attract 76 Democrats. I think when the Republicans basically turned this into an election year issue, whether accepting campaign donations in crypto or saying that they would protect the right for self-custody. That's a big one. That's a very big one for Bitcoin. And we're very much aligned, even though we have an ETF and that could be a centralization vector. We think both are true. Self-custody.
Cathie spoke at a forum in Hong Kong last month and said, "We think we're going to see surprisingly large rate cuts this year. We think the rolling recession that has been sweeping through the US and is hidden underneath headline statistics is going to drive rates down." In last month's edition of her monthly In the Know, Cathie was concerned about the rising number of bankruptcies and retail closures, as thousands of brick-and-mortar retail and dining establishments have closed across the US in recent months due to inflation, stagnant wages, and higher borrowing costs. She also mentioned the commercial real estate crisis and how it could hurt us banks. Cathie, the only way forward is for the Federal Reserve to significantly lower rates and resume quantitative easing. Please share your thoughts on Cathie's interview and her predictions for Bitcoin, Bitcoin ETFs, and the US economy in 2024 and beyond. If you like this video, please check out our other videos, give it a thumbs up, and subscribe for more updates. See you next time.